Hey, what's up, guys? Welcome to the How to Trade Elections video. So we're gonna cover, how to trade elections, why elections gonna matter, how to trade it, etc. So let's jump right into it. Why do elections affect currencies? I know we just covered this a little bit in the last video, um, but essentially, an election is usually for a president or prime minister, right? Prime minister is basically like a president, depending on the country, but similar role. It's one person, or a certain party having control over Congress or Parliament. Right. So Congress, Parliament, Prime Minister, or President. Those are going to be the main types of elections that's going to matter. So whoever the president is, whoever has control over Congress or Parliament, they can shift a country's economy drastically, depending, on the laws and changes that are implemented by that party or person, right, and their views on how the world should be. Therefore, when an election has an important theme attached to it, markets will start betting on who the winner is because that's going to ultimately matter to, that country's economy or the world economy, right? So notice I put it has to have an important theme attached to it. Not every election is going to matter. If there's not a certain theme for some reason, something going on at the time, then an election is just an election and it's not going to move the currency. Now, why does it happen during elections versus when they actually implement the policies? Well, currencies move before a better or worse outcome actually happens, right? We call that pricing in, the probability of something happening, right? We've covered this, right? As long as there's a decent chance it's going to happen in the next few days, weeks, or months. And in order to be efficient, the markets will price this possibility into the currency, right? Of course, the direction depending on if it's good or bad for the expected party to win. So if one party or person is expected to win and overall their policies are deemed good for the country, the currency is going to start going up. If someone is likely to win and their policies are looking bad for a country, then the currency is going to go down. But either way, the market's going to start pricing this in, this new reality that's going to come in the future, right? If they win, right? So it's all dependent on who wins, because whoever wins has the power to change reality, change the economy, change laws to, whatever they want. So something very important, right? Not every election is going to matter, right? Why only certain elections? Because there needs to be a theme behind the election that's perceived to be important, and that's not always there. So, for example, the presidential election in 2020 for the United States mattered, right? You could have traded off of that because one candidate was, aka Biden, was going to spend more money on economic relief, right? More stimulus than the other, which was Trump. Now, at the time, the big theme was COVID, right? That was a big theme, and so this election mattered because Trump was not going to spend as much, would not get the economy off the ground quite as much as Biden would, who does not mind spending money, going more into debt, and that was perceived as positive, right? So, and we're going to cover that scenario a little later. Second scenario, 2019 parliamentary election in the UK. That mattered. That was a huge theme, very, very good theme to trade off of, because one party, the Conservatives, was more likely to get Brexit done with. They said, hey, if we're elected, we are going to finally officially leave the EU, right? Versus the other party who was not quite as trigger happy to leave. They wanted to make sure everything was good, et cetera, et cetera. Whereas the Conservatives said, hey, whether we get a deal with the EU or not, trade deal, we're leaving, we're getting it done with. And that was perceived as positive for the pound. But, right, these are examples of themes around an election, but there's not always a theme, right? So a normal election with nothing special or theme happening will not matter too much to financial markets. Now, a point here, how often is this going to be tradable? Well, I would say once a year at most, there's going to be an important election that you can trade off of for the, the main 8 currencies. And that's, like I said, kind of at most. right? We had one in 2019 and one in 2020. That was it, right? I'm not just picking examples. These are literally the only examples in the last 2 years. So, right, this is not something you're going to be doing every month, looking at every month, trading every month, but every year, every 2 years, it can add up, depending how long you want to trade. That's a lot of decent trades you can take. So that's why I'm covering it. So a little bit of an election timeline. What is it looking like? When should you expect different things to happen to help you trade it? So 1 to 3 months, usually, right before the actual day of the election, it will become relevant to FX, to markets, right, etc. 1 to 3 months. It's variable, depends. You never know exactly, but that's a good guideline. So once it's relevant, and how you're going to say, how is this relevant? Well, again, later on, I'll cover where to find news, and so don't worry about that part of it, right? The news sources I get my news from, they will say, hey, this election is coming up, it's kind of important, blah, 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 blah. So that's when it's going to become relevant. Now, after it's relevant, then what are you looking for? Leading up to it, polling. You want to look at polling. It's going to influence FX prices, right? So, polling is not the most accurate thing in the world. If you followed elections, right? It's not always right, but it still influences FX prices. So, I put the little percent sign there because if a candidate is, the polling is showing there's an 80% chance they're going to win, right? Then that's going to influence FX prices. That's what's going to be priced in. There's a greater chance of that person winning or that party winning the majority of Congress or Parliament, right? And whether that's perceived as good or bad, the currency is going to go up or down leading up to the election, and you can trade off of that. Now, the market's going to price it in, right? We're going to price in the expected outcome leading up to it. Now, the day of the election and when the winner is determined, the price will fully reflect the outcome. So if the person that's good wins, price is likely going to head up. If the person that wins or party that wins the majority is bad, price is going to go down, right? Very simple. And it may even affect sentiment for a few weeks afterwards, potentially, depending on the outcome, especially if it's a surprise. If it's a surprise outcome, then it's definitely likely to affect sentiment for a few weeks, and you can trade it in that direction as well. So in one election, you can take a few different trades, right? You can add before, right, heading in a direction, after the election, during the election. There's many different trades you could potentially take. Let's get into some scenarios to better visualize this. So New Zealand, right, has a prime minister election. This is the price of New Zealand dollar. And the candidate that's bullish for the currency, I'm not going to get into why it's bullish because that's so variable, right? There's just, you never know exactly why, what theme is going to be relevant to an election. So I'm just going to say that whatever theme it is, this candidate is bullish for the currency and it's expected to win, whoever this person is. So that gets priced in until the election, right? We can see that. Let's say right here it becomes relevant. Overall, this person is good and they're expected to win. We see the price rise and we're going to look for buying opportunities on those trades, right? Now, how do you buy it? Well, you can either wait for a pullback, wait for a breakout. I mean, there's so many different ways to enter the trade, but you still, the direction, right? And so you take trades going long the New Zealand dollar until the election. And that outcome becomes reality. That person ends up winning. So this gives the New Zealand dollar a boost. Let's say right here is the election. Boom. Right? You get a little bit of a boost, and that marks the end of the theme. That's it. It's fully priced in. The person won. And, it's likely to head lower after this. Just, naturally profit taking happening, whatever. But that's it. Right? After the election, the person won. It completed the move. And that's it. No more trade, basically. That was it. You made your money. Boom. Next scenario. Price of the pound. So this is the UK. So the UK has again, prime minister election, and the candidate that is bullish for the currency is about tied in the polls with the candidate that is bearish for the country's economic outlook. So it's about equal in this scenario, right? People are, unsure about who's going to win. So, as we can see by the price, doesn't move a whole lot, does not move a lot higher or lower. It kind of stays about the same. So nothing gets priced in until the election happens, right? Because what is there to price in, right? We don't know. There's nothing to price in because we don't know who's going to win. Anyways, once the election happens, the bullish candidate ends up winning. So huge move on the pound, gives the pound a boost, and like I said, because it's a bit of a surprise, positive sentiment will likely be in the markets for at least a week or two. All right, so it'll likely stay up, elevated, or maybe even head higher, and that's a potential trade as well. Right? So in these types of situations, there's not a whole lot you can trade on, right? I mean, there's nothing to price in beforehand because it's unsure. And right before the election, again, no one knows, so you can't really buy it right before. The only really trade in these scenarios is after the election, or maybe during. If somehow you're fast enough, you get the news, you can price it in heading higher or lower, right? But I would say the only trade really there is like I said, the positive sentiment afterwards for a week or two. Maybe it'll probably pull back. You buy the dip and catch a move higher, right? So next scenario, basically it's the same exact thing. I just reversed it to show you, what it would look like the other way. So the candidates is bullish for the currency, tied in the polls, nothing gets priced in until the election. The bearish candidate wins. This gives the pound a large sell-off, and negative sentiment will likely be in the markets for at least a week or two. All right, we see that. The election happens, boom, massive sell-off. Again, if you're fast enough, you might be able to catch this. If not, wait for a bit of a pullback, I would say. Or, depending on how you trade, maybe pull back, wait for a breakout. However it is, you want to enter, I would say catch the negative sentiment is really the only trade in these scenarios. Next, right, so we've covered what it looks like when someone's expected to win and they do. So let me just go back here. And it's the same thing on the negative side, right? If someone is expected to win but it is bearish, then it would just look like the currency heading lower for that period of time. And when they do win, it would, do the exact opposite. We'd see a slight sell-off there, and that would be the end of that. So let's move on to, I believe, the last scenario here. So Canada, this is the price of the Canadian dollar, has a parliamentary election. I believe Canada has parliament, it's not Congress. And the candidate, wait a minute. Sorry, not candidate. The party that is bearish for the Canadian economy is expected to win. So that's a negative, right? And we see that is getting priced in up till the election. The election's right here. And that's a tradable opportunity, right? The party is expected to win is negative, so that's going to get priced in. You could look for sell opportunities, right? That's a trade there. You can make money there. So this gets priced into the market. The CAD sells off in the month leading up to the election. On election day, there's a surprise, and the party that is bullish wins the majority. We see that huge reversal of this downward move, right? And the Canadian dollar races higher on the breaking news. And it will likely continue to be bought for the coming week or two at least, because now there's positive sentiment surrounding the Canadian dollar. Right, so what's the trade here? There's a few trades to make. You trade the sell-off, right, because that's expected beforehand. And then after you do that, right before the election, I would likely get out of that trade. You made money, right? It's kind of risky to hold at that point. Next trade, I would say, obviously during the election, it's a little risky. You never know who's going to win. But afterwards, or maybe even during, if you're quick enough, you can catch the move and then wait for a pullback or, again, wait for a breakout. However it is you decide to enter your trades, catch the positive sentiment for the next week or two, right? So that's how I would be trading that. So again, elections, although they come around infrequently, there's a few ways to trade them to the point where, you might be able to make 2 or 3 good trades. And you could even, in this month, make a few trades, right? Make a few small trades or add on to your trades. So this is a good amount of opportunity, even though it is rare that this theme comes up. So quick 2 examples I want to show you guys, real examples, how the actual charts looked. to give you guys, just a better idea, and a little bit better idea how to trade this. So the pound, this is the pound yen chart, and this was, again, as I talked about, the parliamentary election in the UK in 2019, right? Remember that scenario or that example I talked about? This is the chart for that. So the pound was supported for about 1.5 months as the polling shifted in the Conservative Party's favor. Again, the Conservative Party was looking to officially leave the EU as fast as they could and finally get Brexit done with. That was seen as a positive. We can see that, right? The pound did not sell off that much. It held this support generally, right? We had a huge run up beforehand, and the pound stayed very, very supported because of this fact. We saw the pound was just bullish. You could have bought the pound right here, right? I think I bought the pound right here, and then I bought some more right here, and then I bought some more right here, right? Just buying the dips as the market was pricing this in. Day of the election, December 12th, right here, right? The pound stayed higher because guess what? It was expected that the Conservative Party was going to win. And they ended up winning, and there was a huge move higher, right? Because although it was expected, it wasn't 100%. So there was still a little bit more to be priced in there because it did not fully price in the win because it wasn't for sure, it wasn't a reality yet, right? And so I actually held on to it, and that was a great day, right? I had positions running. I made, I think I caught in some positions 500, 600 pips in total, right? So again, these are some great trading opportunities. And then afterwards, as this theme was done, finally priced in, of course, there was profit taking, and this thing pulled back, and there wasn't any follow through. Why? Because the positive sentiment was there. It's been there for months, and what was expected to happen happened, right? So there's no reason for there to be follow through. It was fully priced in at that point, right? Next example here. And this is something that's really important. This is the Trump versus Biden, right, presidential 2020 election I was talking about. This is not, however, the U.S. dollar chart. You would think, why? Why isn't it? It's a U.S. election. Well, U.S. is a very important country, right? And so it affects, if something bad or good happens there, it affects the global risk sentiment, which, as we've talked about many times, that affects almost every other currency, right? The Australian dollar yen chart is what we're looking at here. Very good measure of risk sentiment, right? Because this is a risk currency versus a safe haven. So, if this is heading higher, there's risk on. If this is heading lower, usually there's risk off. So, risk sentiment was very, very strong risk on for many months. As you can see, this thing literally just kept heading higher. Reason being, the recovery after COVID, right? It was pricing in everything reopening, et cetera, very optimistic, right? Overall risk on. So very simple there. Now, risk sentiment turned more risk off as we got closer to the election, right? Risk assets like the Australian dollar sold off, and safe havens, I didn't complete the sentence there, but safe havens gained a bit of strength, right? We see this move here, right? So right here, beginning of November was the election, right? So for a month or 2 months, this thing sold off because there was jitters. There was jitters that Trump was going to win. It was a bit 50-50. The polling didn't show it, but overall it was pretty 50-50. If you were watching, the different parts of the country, regardless, it was pretty much 50-50 who was going to win that election. So the markets were a bit jittery. Trump might win. He's not going to spend as much on stimulus. That is not the best for global recovery, right? And for our risky investments, right? Thinking like a big bank. Not the best for the risky investments. So they'll sell off the riskier currencies, buy the safer ones. Now, that was a potential trading opportunity. The better trading opportunity, in my opinion here, which is one that I capitalize on, The week of the election, Biden was declared the likely winner by the next morning within the next few days, right? This was a weird election because it took like a week for them to officially declare a winner, but after the first day or two, it was the chances of Biden winning were almost 100%, right? And so what do we see? This thing raced higher, right? It was pricing in Trump winning. That didn't happen, raced higher, and because it was kind of a surprise, there was still positive sentiment. Now again, this isn't the only reason this thing went this far. I mean, this is literally hundreds of pips, right? So it's not like we're talking about, 20 pips here. Now, the better trade, again, as he was declared the winner, was to buy it and just ride the positive sentiment, maybe buy the pullbacks or buy the breakouts. However, again, it is that you trade. Just buying it, I think, afterwards and holding on to it was also a very good trade. Anyways, that was the last example, just showing you guys, just how much opportunity there is trading it, how to trade it, and what to look for. So anyways, I will see you guys in the next video. Make sure to do the simulator for this one. There's different examples, different scenarios. Hope you guys learn a bit better. And in the next lesson, we're going to be talking about fiscal policy when government passes like stimulus and recovery programs, when there's recessions, stuff like that. We're going to be talking about how that affects currencies with a few examples. So I will see you guys there.